Hey, what's going on, guys? Welcome back to Way Up Trading. I'm actually away from my normal setup, so you're not going to be able to see my face and my intonations and those type of things that I normally like to do on most of my videos. So we're going to keep this one straightforward. Taking a look at this AMC chart, and yeah, this is a overlay. I'm looking at the 12-hour chart right now for AMC. You can take a look at my screen, and you can basically take a look here and see what we're working with. Got that nasty sell-off on Friday after hours. I mentioned on the video prior, the day before, that volume was looking very, very indicative of a move happening on the stock, which we did actually wind up getting. We had a 6% move on the day. Very nicely done. Was able to call that in advance just based on the volume profile and what was looking like was happening. Lo and behold, we had that set up there with the signing of the settlement with Judge Zern. That was basically being wound up. That was the explanation of what was happening in volume. News event, generally we're going to trump what the charts are doing, and you can kind of see them in advance just by paying attention to the volume profile, exactly what we did prior. So what we saw there was the move up that we were looking for, going into the $5 range, higher $5 range, closed out the day at 526, 5.62% move on the day. At some points, I believe we were actually well above 6%. Nice move up. And then it happened. After hours, 28% down, lights out on AMC, and the ape move up after the conversion reverse split had been settled. Right now, that brings us into a very, very crucial area and very, very crucial location on AMC stock. Now, you can get into all of the different things as far as what's to be expected with how high ape will go. Ape is in a squeeze type scenario, but at the end of the day, in my opinion, AMC is still AMC. And at a certain point, the arbitrage play no longer makes as much sense as it did if you bought at 60 cents. Like most of us were doing, buying in the 60 cent range, $1 range, in those areas when we were averaging in and averaging down on a position, not selling our original positions, which are still going to be intact. Every additional share we have, every 7.5 shares of ape, is then converted into one AMC, right? So there's the arbitrage. There's that opportunity at a certain point. But if you're going to be buying higher up than that, or buying higher up into those ranges, we might see a potential move. We'll take a look at ape in a little bit. We'll see potential moves potentially into the $3.30, $3.50 mark. I can see very easily. If we start to move from there, we actually break the 338 mark, we'll start to see most likely into the $5 range. Is a very high possibility as well. But in terms of AMC, and a lot of people are playing the chain on AMC, the options chain. I wanted to go over what I'm seeing here on the charts and what the possibilities are. And again, I started this off here with the structural analysis, basically looking at it through a Wyckoff lens on where we are. And right now we have a quadruple bottom now that's now set up on this stock. 4 times now touching this $3.50 area, $3.50, $3.70 area, not allowing it to break under this level. And in this situation, we're going to go ahead and take a look at the structure of the Wyckoff chart, give you an idea what we're looking at. As you can see, where there's 4 to 5 different phases on the Wyckoff schematic, which is an accumulation style move. And basically, we have actually seen this exact pattern as we just saw at the overlay. Got sell off at the ape dividend, ex-dividend date. Fell off, came back, and we got the 3 bottom touches in this trading range. We have created a trading range ever since the beginning of, roughly about the beginning of the year, early January, all the way up until now. So almost an 8-month grind within range between $8 and about $4, $3.70 to $4. This range has been a grind back and forth, very similar to what you see on this Wyckoff chart, where the trading range, the resistances sit as well as the support levels sit. On the third move down, the third test, that's where most people start to get excited. We have an opportunity to break through. I have a creek set up here, which is going to be our smooth moving average, which is a line that I constantly talk about as being the areas of potential pushes or supports, or major supports. And this is again the 12-hour chart we're looking at, just so we can see the after hours move as well as a little bit more action on the price. However, what we got here, very similar to the Wyckoff chart, is a break and buy zone, which is considered to be a spring underneath the general trading range we've been in for that 8-month period of time. So basically, once you drop down out of that trading range, momentum is built in because everybody attacks and is purchasing in this area because, hey, they can tell this is a deep discount. Just like it's called the spring. It's just called a spring because it's a deeper discount than what you see available in the normal price range. So everyone's piling in because obviously if there's a trading range here, you have a small window of opportunity to make money between the low and the mid range. So in this case, a lot of folks are piling in. Price gets shot through. We have a creek here, which is again lining up with our smooth moving average, which I'll show you in a minute, which would send us up. Passing that smooth moving average is going to be considered jumping across the creek, or jumping the creek. The average does set up as a creek location. Break through, find support, and then we'll push through the top of the trading range just as we broke through the bottom of the trading range. That momentum is built up for the heavy buying pressure from this low range to the upside. Break that range, we'll find support above the trading range, which would be later on down the line. That may take a little while. In this particular case, I can see us, once you break the smooth moving average, I can very much see a higher push, possibly touching somewhere around $11 and then coming back down to somewhere around 7 or 8. In this case, you can see how it operates, where we get a SOS move, which is a sign of strength after the spring. You get a last point of support, generally be on top of the smooth moving average. I'll show you in a minute on that as well. From there, we'll push up out, and we'll start to get a larger markup phase, which should push us through to the $15, $20 mark. And then, like I mentioned before, we'd be looking at a $29 move at some point. I'm still leaning toward the end of this year. My mark, like I mentioned before, was at the end of September. I know we don't do dates in this community, so I did put a little bit of a date out there. However, I'm asking for a little bit of a grace period on that because the way things have played out time-wise. But I am leaning toward the end of September, and a possibility of about a 30-day window additionally on that time frame to start hitting those numbers, in my opinion. Now, this is not financial advice, not a financial advisor. This is just based on moves that I'm seeing in the markets and how these things operate. It could take a little longer. The one downside of using Wyckoff analysis is getting the timing correct. And in this type of situation, with a squeeze move, we don't know what the other factors are in terms of how the economy is working, what's going on with the rest of the market, which we do need to pay attention to. So I'm going to go ahead and remove this real quick just so we can get an idea, or actually fade this out and make it a little bit more transparent and do the overlay once again, just so you can see how the AMC price action on basically on a daily time frame is basically mirroring this entire move. You got 1, 2, triple bottom, as we knew, was a slight uprise in the same trading range I mentioned, between $8 and roughly about $4, back and forth. Triple bottom, as we knew, with the uprise, slight uprise here, and now with that drop off has forced us into the spring zone. See, it's boxed off red as Wyckoff buy zone. In this area, this is where big money is now going to start pouring in. And in terms of, in my opinion anyways, and based on how this chart is now laid out. As far as volume is concerned, moving a little bit closer on the volume in just a moment. However, in this area as a spring, we can possibly, again, this move happened after hours, so this right now, the same way as that 100% move that we had on 2 Fridays ago, they didn't count it because it happened in after hours. So technically speaking, it only hit $6.23 in regular trading hours. We all saw $8.90 or so hit on that after hours move, but at opening, we were already at $6.23, and we continued to pile downward ever since. So what registered was $6.23, even though it was a 100% move. So in this particular case, on the downside move, we're going to register $5.26 as the closing price until open on Monday. At that particular point, I still do see a potential opportunity or potential chance of this thing dropping down even lower. And a lot of people may not even like this part, but this is part of the shakeout phase, or shakeout for weekends in the spring, that they use in order to sweep stop limits and things like that. And it all goes back to a very particular time that we were all familiar with, if you've been in the community long enough, the buy button removal. And the buy button removal is sitting right here at about $3.20. 320 was the buy button removal the day that they pulled the buy button, and that's where a lot of liquidity should still be sitting. A lot of folks that are still holding shares that they purchased way back when in the $1 and $2 mark, they haven't felt any pain yet, and they need to feel pain in order to scare them out if they're also on the weak side of things. But we're trying to be we are more educated now, right? We understand how the stock market works. We've been learning, growing as time has gone on, and we're not going to be taken advantage of like we were last time around. However, in this particular case, the buy button removal sitting here at about $3.20. It is a high possibility that we can spring down there, or basically slice down there and open a quick wick downwards. In my opinion, would be the absolute bottom in this situation. And we'd start to get our move back up. I can't say how fast or how slow that move would actually take in order for us to break back up. However, a lot of buying would be happening in that area, and we should see some heavy volume going into the new week. And that's basically been the problem with AMC. It's been very volume starved for the last several months on end ever since this whole ape movement has started, or the ape dividend was etched out. So since January, no volume. I mean, the volume has been dry, which we'll take a look at the volume setup here. So zooming in a little bit here, volume setup. As you can see, the highest volume in the trading range, or where we actually seen in a long period of time, has been more recently. The 100% move that we had in after hours, a huge spike in volume. That was about a 230 million volume day that we had. You can see that volume was then bled out as the drop down ensued to basically go and fill the gap. Slow trickle up, no real volume, basically falling into the 10 to 20 million volume range for several days on end, almost 2 weeks of that, till just after hours we got a spike. So now our volume is actually now increased above a little tighter here. Our volume is now increased above the median line, that white line, or the moving average, and I want to see a continuation of volume. I'm thinking Monday, Tuesday, we should start seeing somewhere in that high volume range of about a million in volume, about 100 million in volume on this particular stock again, minimum. We'll see how things go. We'll pay attention to it very closely, but again, I do still see a high possibility of a quick shot down to 320. I'd love to see it continue from here and start picking up in pre-market and we just go. However, we have to take in consideration that that's a possibility and get that wick downwards before things start to turn around on AMC. So in terms of overall movement, I'm going to go ahead and get rid of this for a moment, and I'm going to add a few back. All right, so this is now the setup here in terms of price levels in this particular range. Again, Apex dividend date, you can see that we had this downside move. Obviously, the spring test, this initial sell climax here, which is the bottom of the falling wedge. A larger time frame, you can see that falling wedge I have set up here. Sell climax, automatic reaction, automatic rally back up to test the top of the trading range. Trading range is then tested once again before it fell all the way down to the $4, roughly around the $4 mark, around 370 and change. And we started to make our way back up, going towards earning, touching again this smooth moving average, which is also going to serve as the creek before hitting this, getting halted around the $9 mark after hitting this line. So that's our second test of the creek. On several occasions, as you see easily, that line, that smooth moving average, has been where we've been halted on multiple occasions every time we came close to it. So again, this is the March run, the August run. We got halted a couple times there, halted here as well on that retest in early January or so. Came back down, halted here. Every time we touch this line, we've been halted. More recent run was after hours, so that run up to 100%, 100% run to about $8, not during normal market hours, so they will halt in that case. But every other time crossing this line has been the time where we've hit halts. So that's going to serve as our creek. Again, this is our downside support underneath that line. We've gotten spring type moves, sell tests, sell test 1, sell test 2, sell test 3. Briefly jumped the creek, technically in after hours, which you can see as we crossed it, price rocketed up. We got that 100% move up to about $8.40 from a $4.40 closing that day. Basically came back to retest the top of this wedge. Moving a little closer, came back to retest the top of this wedge, started to bounce, move upward, closed at the 526 this past Friday. Got the news, shot down into a spring. Now again, 320 is a possibility. Would love to see us bounce off from 350. That'd be beautiful. However, if that doesn't happen, we get a lower push. It's going to be the part that really sucks. But from there, in my opinion, like I mentioned before, be absolute bottom, and I'd start looking to move upwards over time. Now, how fast or how slow, like I mentioned before, I couldn't say. But my price targets in this case, we'd have to break over 584 would be the first level break. Once we break through, next level I'm looking to break is 613, as I mentioned on several time frames, several situations. Then from there, we're looking at 750. 750 is a very huge area to break above, and that's where I consider to be our LPS or LPS location. Now we can most likely from there we can break through, probably touch something around like 11, like I mentioned before, and then we get a very large downside considered a backup LPS. I don't have it written up here exactly. However, I would expect a backup LPS type of move, bring us from 11 all the way down to about $7. And that's the part that'll be a little painful in this type of a move. Again, it can happen very fast. It doesn't have to take a couple days or so. It can happen in a blink of an eye, even in maybe in a couple hours. We come back from $11, $12, come back to like 7, 8, and then from there rebuild enough pressure to start to move to the higher numbers. 15 would be next, and then from there it's at $20 level, and so on. Now, there's a possibility they can drag this thing out. I don't know what they're capable of in this situation. There is a lot of things that are going on with the conversion reverse split and how long things can take. My understanding, they cannot appeal the situation to lock this up again. But also at the same time, I don't know what these guys are capable of doing in order to slow this process down. At the same time as well, the market is going to start in the opposite direction than what we've been seeing. And it's still my thesis that as AMC starts to climb, it was always in their interest, the short's best interest, not have AMC run during a bull market. So as the market is coming downward, it will just slow down liquidity into the markets, or slow down just buying power in the markets, which would basically snub the potential run on AMC. Is one way to look at it, but it also, from the other side of it, it's a potential liquidity pull from other equities and things like that in order to basically pour back into the short position. So I just want to bring out one or two more things just to kind of go over. This is the same exact structural analysis, Wyckoff accumulation phase, Wyckoff accumulation schematic number 1. And this is actually imposed here on the January 2021 squeeze. And if you take a look at the structure, once again, this is a very, very similar to structure that we have compared to the current time we're in. Same setup, quadruple bottom, type 1, 2, a little longer because this is a little bit way back in early 2020 before the induction of all this volume at the time and the FOMO and all that good stuff. However, this was a very similar setup where you have a quadruple bottom, 1, 2, we have 1, 2 upwards by the creek, rejected by the creek, rejected by the creek, 3, fourth time down below the trading range, created a spring, popped right through, broke the smooth moving average, squeeze, came back to retest, which was the backup LPS we talked about a little while ago. Something similar we're going to most likely see somehow, some way. This was the buy button removal situation at the time, but it did serve as a backup LPS. We had another move. This took a couple months to actually, well, this took a couple days or an hour to actually happen when it did. However, the move to the next phase for the markup was the June 2021 squeeze. So this squeeze, the initial squeeze, was in January. June was only a continuation of the markup phase for that period of time within that range. So we're in a very, very similar setup here. As you can see what happened back in June, we're going to get this first part. I clearly can see that based upon the structure, based upon the accumulation, based upon the volume, how things have been completely dried out. We're going to see volume, maybe not as much as what we saw in the billions as we saw with AMC back in 2021, January 2021, but I definitely can see a few hundred million coming through on the stock as it goes through this phase from spring to squeeze. Now, again, this could take a little while. This took time-wise, this was a roughly about a month period of time. Completely different situation, completely different time frame at that point. However, it took roughly about a month from spring up to height, which was basically about December 30th, let's say, was the spring at the end of the year, and we saw the squeeze at January 27th. That's what it looks like. That's what the potential of this move can be in this range, in this setup. Quadruple bottom, very similar, couple sell tests with a spring, moves up into the SOS phase, and once you cross that moving average, which is again jumping over the creek, if you can see it very lightly there, the creek is in the same location where we bumped our heads on several different occasions back in January of 2021, and we're in a very similar setup here going forward. So back here, this is what we're looking like. So my targets still have not changed, as I mentioned before. That 14 area is going to be the tough one to break. Once it does, $20 from there. I'm looking at $30, but anything's possible. If we do break those levels, forget about it. This thing is out of here. We'll see new all-time highs. But for now, we're going to stick to what the TA says. My target is still $29 to $30 going into the end of September with a 30-day grace period, possibly the end of October. I'm not switching up. I'm just giving myself a little grace because of the fact that this can take a little longer. Now, if in terms of what happens with the reverse split situation, numbers will look different, but the chart will remain. Nothing is going to change chart-wise. It's going to continue. You may see $30, and at that time, we'll say $300 on the price targets. So this will just change on the right-hand side. The chart and the way the prices move and the stock will continue to remain the same. Just the numbers will be adding an additional zero at the end. So $14 will be $140. $30 will be $300, and so on. So don't get too phased by that. All right, now in terms of 8, taking a look here, this is a little bit different of a schematic, and it is also still a accumulation style move. It's just a little bit different than what we see on the AMC. You can start off here with the left-hand side. Obviously, everything that's sold off in the beginning, once back in the beginning of August, sold off. Got this automatic reaction here, where basically when reverse split was actually announced, shot us back up. Sell climax shot us back up to an automatic reaction. We had a test here of a midline. Another up thrust shot us back where we hit our highs at roughly around 330, 333 after breaking through the smooth moving average, which is, again, there's not as much information on this one because it's a little younger. Obviously, a lot younger than AMC is. So there aren't any daily moving averages and things like that. They're just being generated now. Longer term EMAs and SMAs. However, a couple are showing up on the shorter time frames. This is the 8-hour chart we're using. It was distributed later on, and it started to form this bull channel. You can call it a bear flag, but this is also accumulation move. So to the upside, we weren't showing any signs of falling down. It's just been consistent grinding upwards, even though it may have felt a lot longer time-wise. It has always been in an uptrend. Broke through major resistance level, which is sitting out around the 168 mark. Broke through, found support on it as the last point of support. Again, this smooth moving average is creating a creek, very similar to what we saw on the AMC chart we just talked about a minute ago. Every single time it broken through briefly, you got a quick wick through, shot back down. Quick wick through, shot back down. This drop here at the announcement of the court situation, this is a sweep or liquidity sweep. You can call this not necessarily a spring. This is more like a shakeout type of move. Call it a spring as well, whatever you like to call it. However, this is off of a third test down. The sweep shakeout took place here, pushed us back through, back above the smooth moving average or the creek bull channel here, rejected back down, held under, and then now just recently in the after hours on Friday, pushed through, breaking one of our key levels here, breaking through the smooth moving average, and is set to start to squeeze to the upside. Targets on this one, 222, major target in my opinion, followed by 265. We start to break 265, automatically going to start eyeing more recent highs from earlier this year, roughly around $3.30. If that breaks, I expect it would come back down quickly to retest, probably a shot through, and then we can start making our way towards, I believe, somewhere around the $5 mark would be the highest I believe it would go. We never know. It could go more. It's possible. But at that point, I'd be looking more so for a steep drop back down to somewhere around the $2 mark, $2 to $3 mark, somewhere in that area before possibly going a little bit higher, depending on how things move or how fast things actually go with the conversion reverse split. So that's really what I'm looking at for 8 week. Can it go higher? Can it go past $5, $6, $7? Very possible. In terms of what I have here on indicators, I'm going to turn my order blocks on, and as you can see, I just taking a look at it now. Off that drawing I just made a second ago, you see how we bounced off through, retested 330. I have an order block sitting here. The max on this one is about $6.06 as a sell area. From that point, I'll be looking at a backup LPS coming back down to test somewhere around the 265 mark, and then potentially start to push higher at some point. I don't know how fast it can go, but I'm expecting move up nicely on 8. Possibly from where we are in the 220 range, and probably another 100%, 80 to 100% from the $2.20 range. It'll be a nice trade. If you're holding it for conversion reverse split, it's only up to a certain point that arbitrage would make sense. It may be a trade. It depends on if you're going to hold on to these for now. If you bought in way lower, what like a lot of us did, keeping your original shares and adding to them as they got cheaper. Congratulations, you should be sitting real pretty right now, because this thing is going to move up pretty nicely a little bit in relation to AMC, while AMC starts to get its gears grinding and start getting ready for its move. So that's basically what we're seeing on Ape. Ape has already started its run. It's going to continue. Should be looking like a real nice move until we get notice on when things are going to be completed and conversion setup happens. So I believe it's 7.5 Ape for 1 AMC, so you can do the math on that to find out what your averages are. I'm pretty sure they set up this whole thing in order to kind of confuse everyone on what their cost averages are, but if you haven't sold anything, you'd probably be all right. Just maybe adding to it and averaging down and things like that. So that's pretty much what it's looking like on the chart side. As far as what the setup there is with the settlement, I mentioned 10-day time frame, 7.5 to every 1 AMC. There is going to be a new QSIP number. Now, does that necessarily mean the shorts have to cover their positions all at one shot? No, it does not. So that may not be the case. However, in the long term or the longer term, we all know that shorts do have to cover that at some point in time. And as fundamentals the debt situation and everything like that gets improved, or it does improve, likelihood of covering of the shorts is getting better and better as the company gets cash flow positive, out of debt, and can issue a full dividend. The normal standard way of how shorts get squeezed out is issuing a dividend. Shorts are responsible for those costs, and that would be the surefire way to get shorts out of their position where the stock can fully squeeze the way it's supposed to. All the other things as far as naked shares, the threshold list, all those other things, can't really speak too much on that. However, the chart's good opportunity here. Looks like it's going to be some nice movement to the upside. Just get prepared, do what you got to do. But yeah, so far so good. If you like content like this, go and hit the like button, subscribe, join us on the way up. I'm going to be here each and every day, growing our portfolios together and making the income for 2023 and going forward. If you'd like to join the Way Up Trading Group, my link is down in the description. Check it out. Free trial opportunities down in the description. A lot of things happen there, making some money together on these markets. Also follow me on Twitter. Looking forward to talking to you guys in the next video. Peace.